I'm Alan Kenny, Editorial Director with REIT.com, and we're at the Waldorf Astoria Hotel in New York for REITWeek 2014, NAREIT's Investor Forum. Joining me is Marty Cicco, Senior Managing Director with Evercore Partners. So Marty, we've seen quite a bit of growth in the area of the single-family housing REITs. Do you think that sponsors still have an appetite for these offerings, though?
You know, as John Gray very thoroughly discussed at the luncheon yesterday, the single-family opportunity was clearly came out of the crisis. Is I believe going to be a reasonably short-term phenomenon. They are still deploying capital. It is a scheme that, along with Blackstone, Starwood, Colony, and others, have deployed a lot of capital over the last 3 or 4 years. And 3 or 4 of the companies have gone public. Colony just announced yesterday that they more than likely will come up with some exit strategy in the next year as well. And as John articulated yesterday, they're going to give it another year or two to really develop the business aspect of the rental side of that business. Now, clearly, they've all, I think, made relatively smart asset investments because there has been appreciation, but it hasn't come without a lot of difficulty of renovating a lot of individual homes and really determining if it could be run efficiently in the markets that they're in. So I think that you may see more public offerings to exit. And the real question is going to be, is this a short-term asset play in a liquidation, or indeed will it turn into an operating business where there's a rental business that lasts longer? So it'll be interesting to play out, but obviously the housing market has shown signs of recovery, but we still have a long way to go.
And apartments, office buildings, these are kind of the major REIT food groups. I'm sure you've probably got kind of established protocols for evaluating these kinds of offerings. But when you have a newer sector like single-family housing, how hard are those to evaluate?
Well, I've had the benefit of doing what I'm doing for quite a long time now. It's interesting to me. When I go back to 20 years ago or so, I did the first 2 outlet IPOs with both Tanger and Chelsea. And we struggled at that point in time to get our arms around the outlet business because it wasn't a typical real estate formula, given that the locations were generally outside the metropolitan areas and the tenant base was a lot different. But over the past 20 years or so, we've been faced with a lot of challenges. The data center business is as much a telecom or a connectivity play. And there are a lot of other factors that affect the supply and demand and hence the rental rates and the profitability of those projects. But, it takes collaboration from an investment banking standpoint. Sometimes it takes collaboration with different industry groups. Clearly, the healthcare REITs, were spawned out of the hospital industry and aspects that weren't just pure real estate plays, but you really had to have some other industry expertise. And I know as far as the way we approach the business, I work hand in hand with my telecom partners when we talk about the data centers, with our healthcare partners, when we talk about the healthcare space. You have student housing, you have all type of different businesses that also use real estate as part of the performance of what the service they offer their clients. So it takes some beefing up, and then from the investor standpoint, I think the investors are very adaptable. They understand what the pure economic factors of supply and demand that affect these various sectors, and the market works, in my view, quite efficiently, but it takes some learning curve to get up to speed.
Okay, let's switch gears here for a second. I want you to look ahead to the second half of the year. Do you see any sectors that you think might be kind of amenable to a lot of M&A activity?
I would say the overall climate for activity is reasonably good. But, just as what experience has taught me, M&A is not just about numbers, it's about people as well. So you find the right approach has a lot to do with, the management and the direction of the board. So people come into play. It's not just purely on an economic basis. The great unknown is, throughout the broader market, we've seen an increasing role of the activists. I think you will find that has started to hit the REIT business, although not to the degree it has hit some other sectors. And I think you may see some M&A activity that is really instigated or initiated by some activist activity.
Well, Marty, thank you so much for your time.
As always, a pleasure. Again, Alan.
And for more on this and other REIT news and analysis, be sure to visit REIT.com.